Why walking away is key to funding rounds. Welcome back to the Frederik Today podcast, the show where we cut through the noise to bring you real stories, insights, and advice from the world of startups and venture capital. Today we're talking about one of the toughest decisions you might face in a funding round, knowing when to walk away. Walking away? When you're pitching your heart out, trying to secure the cash that could make or break your startup? It sounds crazy, right? But here's the thing. Sometimes the best move you can make isn't sealing the deal. It's saying no. And this doesn't just apply to founders. VCs, you're on the hook here too. Let's kick things off with the founder's perspective. If you're a founder, you know that funding isn't just about the money. It's about who you're letting into your business. These investors, they're not just cutting a check and disappearing. They're bringing influence, opinions, and sometimes demands. And if those don't align with your vision, well, that money might come with strings you don't want. Take Sarah Blakely, founder of Spanx. You've probably heard of her billion-dollar empire, but did you know she turned down investors early on? She said no to deals where she'd lose control of her company. Instead, she bootstrapped. And look where she is now. She called the shots, kept her vision intact, and built something iconic. The takeaway here? Every deal has a price. And sometimes that price is too high. Founders, you've got to know your non-negotiables. Whether it's keeping a majority stake, maintaining your mission, or preserving your company culture, don't sell out just because someone's waving a check in your face. Let's flip the script and look at this from the VC's point of view. Venture capitalists, I know you're out there listening. You're not just handing out cash like candy. You're betting on people, products, and markets. And sometimes you have to walk away too. Bill Gurley from Benchmark knows this all too well. He's one of Silicon Valley's most respected VCs, and guess what? He passed on Airbnb in its early days. Yes, Airbnb. Now, he's admitted it stings a little, but he stands by the decision. Why? Because investing is about discipline. If something doesn't fit your strategy or your gut tells you it's not right, it's better to walk away than force a fit. For VCs, it's not just about saying no to bad ideas. It's about saying no to good ones that just aren't the right match. And that's tough. But sticking to your principles, that's how you win in the long run. As we've covered, why walking away makes sense for both sides of the table. But what does it actually look like in practice? Let me tell you about a real power move from Brian Chesky, the CEO of Airbnb. Back when they were still figuring things out, Chesky and his co-founders were offered $500,000 in funding. Huge, right? But here's the catch. The investors wanted a massive chunk of the company in return. Chesky said no. Can you imagine the guts that took? They were struggling, money was tight, but he knew it wasn't the right deal. And because of that decision, Airbnb stayed in their hands. Today, it's worth billions. That moment, it's a masterclass in playing the long game. Contrast that with Webvan, the grocery delivery startup from the dot-com era. They raised $375 million. Sounds amazing, right? But investors pushed them to expand too fast, and the company collapsed under the pressure. Sometimes, walking away isn't just about the deal on the table. It's about recognizing when the timing or strategy isn't right. How do you actually walk away with confidence? For founders, it's all about preparation. Know your numbers, know your market, and most importantly, know your worth. If you're clear on your goals and what your company needs, you'll feel empowered to turn down deals that don't fit. For VCs, it's about trust. Trusting your investment thesis, trusting your instincts, and trusting that there will always be more opportunities. Saying no doesn't close doors. In fact, it often opens better ones. Let's not forget about Basecamp, formerly known as 37 Signals. Those founders rejected traditional VC funding and decided to grow sustainably. They walked away from the pressure to scale at all costs, and now they've got a profitable, enduring business. Their story is proof that walking away isn't failure, it's strategy. Let's bring it all together. Walking away is never easy. It takes courage, clarity, and confidence. But whether you're a founder or a VC, it's one of the most powerful moves you can make. It protects your vision, your strategy, and ultimately your success. So, the next time you're in a high-stakes funding round, remember, the deal isn't just about money. It's about fit, alignment, and the future you're building. Sometimes, the smartest thing you can do is step back, take a deep breath, and say, "No, thank you." Thanks for tuning into Frederik Today. If you found this episode helpful, share it with a fellow founder or investor. Don't forget to subscribe, and as always, keep chasing those big ideas. But stay smart about it, and remember, you hold the power to walk away. See you soon.